From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 4th, 2016. In just a moment, we'll be taking a look at the USDCAD, the US dollar versus the Canadian dollar, for today's trade analysis. But first, I want to recap a couple of the other things that have been happening in the market over the past few days. Of course, today we had the big news out of the UK with the cut of interest rates. We did see a drop of interest rates. So the GBPUSD has significantly taken a dip lower, and that's what we spoke about during the live trade room yesterday, the possibility of that turnaround and for the market to go down on that cut of interest rates. Also, we see a shift in monetary policy where the quantitative easing program has increased, and so that also has given way to that continued fall. So we see that as the directional purpose that we'll be focused in on for the GBPUSD, selling on rallies to resistance or breaks of support. At this point, we're at support, so it'd be a difficult place to go short at the current time. If you're looking to go short, don't do it now, because we're just sitting on top of support. You can see that purple shaded area has proven to be support back here in the past. So not a great place to go short now, but it doesn't mean we're not focused in on looking for opportunities to go short. There's only two real opportunities, I think, to go short. It needs to take a little bit of a bounce back, maybe to the green shaded area, or I don't think it will go back up there, but maybe possibly the yellow shaded area at the top of our little range that we have here. Or the next thing we'll look for is the breakdown of the purple shaded area. So we definitely would want to go short. We just either need to make a little bit of a bounce back, maybe the green shaded area back towards 3180, 3200, or finally breaks down 3100 and the purple shaded area. If you're looking for those selling opportunities, which I believe is the direction you want to focus in on for the GBPUSD. Yesterday's trade analysis focused in on looking for support, intraday support for the euro dollar. That never happened. We never got that support. So you should never have taken a buy here on the euro dollar because you never got that support that we were looking for. In fact, it gave us some clue to potential reversal here for the euro dollar to go back down. Let's zoom it in here on the daily time frame. Take a look at those candles from the previous 2 days. Big blue candle, big red candle, engulfing, going all the way underneath the 1160 level again, closing underneath it, and now has continued to pressure back down into the low 111s here for the euro dollar. So there was no opportunity for support yesterday into the pink zone under on top of 1180, and it just continued to break through. So you shouldn't have taken a buy, but now looking for opportunities to go short. Of course, same thing here on the euro dollar that we just spoke about on the pound. Not a great place to go short now, but if it goes back up to resistance, which is the pink shaded area, or breaks through the green zone 111, we look for opportunities for this to continue to go short. We need to keep in mind that tomorrow we have significant news out of the U.S. with NFP data, and you'll want to watch through that as we go into tomorrow morning. Let's move on over to the USDCAD, US dollar versus the Canadian dollar. Of course, we're looking for opportunities to go long here for this currency pair, and we have been for the past couple of days. In fact, I am in a buy. I posted that as a notification for members yesterday, a buy right around the 3060 level at the top of the pink shaded area. We have seen over 20 pips of profit on the trade, so the trade manager has taken me in to break even. So I'm currently at break even with my stop loss. I'm only sitting about 6 pips of profit right now, so nothing extraordinary. It's only seen about 20 pips. So let's just measure it here from the top of the pink shaded area, which is where the 60 level is, the top of the pink zone. You can see it's only gone about 25 pips or so from the top of the pink shaded area. So again, we've only seen just enough profit to take the trade to break even. If it takes it out, I still think that buying this pink shaded area is the main focus for the day today. We got to keep in mind, though, that tomorrow we have news out of Canada and the U.S. that could significantly impact this particular currency pair. Something else that we've been watching and which give me a little bit of a confidence to take into the buy and hold the buy and look for new opportunities to buy is the fact that oil is sitting at resistance. Take a look. It doesn't matter which oil chart you look at, UK oil, US oil chart. Both of them are sitting at resistance. Take a look at this red circle here. This is the UK oil price underneath 43.35 or so. we can see the market holding as resistance around that green zone. See that red circle? Isn't it very interesting how it looks just like what happened up here at the blue circle? So that's what we focused in on yesterday during the trade room. We're looking at resistance and the possibility of a turn back lower for oil prices in the direction of our current momentum and trend. So if oil finds resistance and goes down, we typically expect the USCAD to go up. Same thing, US oil chart, doesn't matter which chart you look at, both of them are at resistance, 41.40 or so here on the US oil chart. Same thing. Blue circle, resistance, fall. Red circle, resistance. Now we're looking for the next leg of the downtrend for oil prices. So, again, take that back over to the USCAD. Typically, if you see resistance on oil prices or falling oil prices, you would look for just the opposite reaction on the US CAD because the Canadian dollar is highly influenced by those oil prices. So if oil decides to continue to go down, we will look for this to go up. So that is, and the fact that oil's at resistance and the US CAD's at support gives us a higher degree of confidence in that. Keeping in mind, of course, that tomorrow morning we have employment data out of Canada that could completely change everything here for this currency pair. And of course, the US NFP also could be a game changer for this pair. So protect profit if you have it. Target the next resistance, which is the yellow zone, and if it can break above there, we'll look for it to go higher. If you're not in the trade, again, dipping into the pink zone gives you your lowest degree of risk and your highest potential reward. So you need it to dip down into the pink zone to give you a trading opportunity. 130.60 is the top. It could be down as deep as 130.35, which is the bottom of the pink zone. So in there gives you your lowest degree of risk. And of course, you're going to target the yellow shaded area, and of course if it can break above the yellow zone, we'll look for further targets all the way back up here to the green zone into the 3200s. The risk is pretty clear. The risk is that everything changes. Maybe oil breaks resistance and the US CAD starts to go back down, breaking 30.35 or so. We'll look for this to head on back down towards the 3000 or even into the upper 2900s here for the US CAD. So keep that in mind. That's the risk. Breaking the pink zone goes lower. Staying within and above it, we look for the market to find support and go back up for the US CAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.